They put money into some of these faltering big banks and investment banks, and now they're getting burned. They bought way too early. It's too early to be coming heavily into real estate. It's too heavily to be coming heavily into any of the markets that are faltering. Okay, avoid stock transactions with internet brokers or financial entities. They will go into meltdown and gridlock in the middle of a financial crisis. Okay, be careful. And you say, well, I'm getting really cheap commissions there, right? I understand. Be careful of dealing with these people. In a financial crisis, they will go into gridlock, and you'll end up losing some serious money. I would avoid debt, leverage, or margin on precious metals. You do not want to own precious metals on margin. Don't get greedy because you think gold is going up, and therefore you should leverage it. We saw a lot of people in this incredible 2,500% increase in gold in the 1970s lose money, because they were in it on margin and they bet right on the trend and they got wiped out by the fluctuations, and those fluctuations are often manipulated fluctuations. You don't play precious metals on margin. Never, never, never. It's a do not do. Okay? Avoid leaving precious metals on deposits or in storage at a coin dealer. A very bad practice. A lot of people over the years have lost their money when coin dealers were storing them. Either the coin dealer was crooked and was dipping into their money, or he went broke or whatever. Not a good thing to do. I would avoid debt. Pay down old debt wherever possible. Okay, the less debt you have, the better you are able to weather a financial storm. This sounds kind of negative, but I would avoid most coin dealers. I'm sorry to say, in my industry, there's more people that are crooked as a dog's hind leg than you can ever imagine. And most people who are not in the industry don't have the ability to see in and look and discern what's crooked and what's not in a coin company until they have been severely burned. And you know, one of the things you can do that's very basic is check with the Better Business Bureau. I say that partly in part because we have the highest rating with the Better Business Bureau in the country, but you can find out real quick if there have been a lot of complaints and lawsuits, et cetera, et cetera. So be careful. A lot of scammy people out there. Avoid or eliminate as many agents as possible between you and your assets. Okay? You want to be as close to your assets as you can. Avoid leaving your stock or bond certificates with your stockbroker. This will be new for a lot of you. I would strongly suggest that you take delivery of your stock certificates. Now, your stockbroker will either howl with disbelief and protest, you can't do that, nobody does that, it is still your stock. Or he will say, we can't do that, we don't know how to do it. He's never had anybody ask him to take stock certificates. But if your stock brokerage firm goes under, like I saw half a dozen brokerage firms go under in Houston, Texas in the 1970s, your assets could be frozen for 3, 6, 9, 12 months, who knows how long, while the courts are sorting the whole thing out. And meanwhile, the stock market could drop 50% and you're locked out. You can't do a trade. So take delivery of stock certificates. That probably for most of you will be a very, very new idea. And put them in a safety deposit box. Keep them very safe. I would avoid municipal bonds and bond funds. I started out on Wall Street as a municipal bond underwriter, and one of the things I noticed even back in the 1970s was how incredibly illiquid municipal bonds are. And those are in normal times. In abnormal times, they're going to really be illiquid. There's not going to be any bids for them. And I don't know if you've been reading the paper lately, but the municipality, whatever the county is that Birmingham, Alabama sits in, is in serious trouble and is threatening to go bankrupt. Guess what will happen to their municipal bonds? They will really be illiquid, okay? Avoid muni bonds and bond funds, okay? Not the place to be in a financial crisis. Avoid gold or silver ETFs where you cannot take delivery on the ETF paper certificate. I would say that ETFs, even though they're a popular way for people who don't understand a lot about gold to get into gold, I think there will be games played with ETFs, and in a major financial crisis, if part or all or much of Wall Street goes into gridlock, you're going to be stuck and you may lose some money. I don't think ETFs are a really good way to buy them, but I'm glad there are ETFs out there, because when a lot of little people come running into the gold market, they will push the gold market way up. I just don't think it's the best way to play the metals. I would avoid bank deposits in large banks. Some of the biggest banks in this country are very, very vulnerable, and I suppose they will bail out a J.P. Morgan Chase. They can't let $90 trillion in derivatives implode, but there's also some other big banks, and before it's all over, they may not be able to bail out all of the banks. Not a bad idea to get a bank rating on your bank. We can give you a bank rating. We can get you a rating on your bank, and we can get some more detailed information on it. We may not be able to get you all the derivatives exposure, but you want to start looking very carefully at your banks. It's going to be a lot of banks going under, in the next 6, 12, 18 months. Avoid believing that Wall Street, the government, or the Fed will protect your interests in a financial crisis. You've got to be kidding. Of course they won't. They will only protect their own financial interests, not yours. You don't count. You never did count. Okay? So just avoid ever for a moment believing that.